Hello, hello. Good morning, everyone. Welcome to another Wealth Coffee Chat. Morning, Graham. Morning, Graham, James, Kevin, all the way from Florida. Great to see you, mate. Haven't seen you for a while. Hope you're well. Alison, Alexis, Jeff, Luke, Bob. Morning, everybody. Hey, thanks for the shout out, Alison. Yeah, last night we had Jeff Brayley from McCrindle Research at our coaching and mentoring program, and he presented some pretty awesome data. Pretty amazing, actually. Aussies have got plenty to be excited about for some of our property investing futures. You and me, we got to make sure that we stick in there because the data showing that plenty of good things coming our way. Welcome to another Wealth Coffee Chat, folks. Do the quick intros, maybe just in case somebody's popping by. Barn. That's no good, mate. You got to fix that. Jason Witten's my name. If you didn't already know, most of you do anyway. But if you knew, we had a couple of newbies yesterday. Say a quick hello in the chat. Be great to meet you. Be great to find out where you're coming in from. We've been doing these Wealth Coffee Chats every morning for a while now. And morning, Kylie. Been property investing myself over 20 years and coaching property investors over 18 across Australia and New Zealand. And we've done a few things along the way. Helped plenty of investors make sense of things. Make sense of data. Last night, we collected a heap of data, and now we, as property investors, need to make sense of some of the stuff that's going on out there in the marketplace and what to do about it. We only have, let's be honest, a limited amount of time as property investors, and we need to make the most of it. So that's what we do Monday to Friday, usually around 10 past 8. Hey, good morning, Sharon. There you go. Morning, Jeff. Good to see you. Oh, what were you confused about, Jeff? Too much data, maybe. Who knows? But last night I said that as well. Remember, collecting bits of data is fantastic, but connecting pieces together to make some decisions and understand what we're up to is probably more important. So, this morning, I thought we might try and connect a few things, and what I'm going to do over the next week or two is grab a few choice pieces of Jeff Brayley's data from the presentation last night, and I'm going to sort of break that down a little over the next week or two. But today, I thought I'd quickly chat about interest rate rises out there in the marketplace and what's going on. Maybe some things to be aware of, to keep an eye on. And, where might it go? Where might it go? And there's a few things. Now, I did something the other day on Wealth, Wine and Wisdom with Andy Fenton. If you guys missed that, you should go and check it out about some of this interest rate stuff. But tell me in the chat, there's two interest rates that get talked about all the time, or two rates that get talked about all the time. Well, it's actually one that then knocks onto another, but you know what I'm trying to say. Well, maybe you don't. I'm trying to ask a question to get an answer out of you so we get some interaction here in the chat. But what are the types of rates that are talked about in the newspaper? And it's not necessarily the actual interest rates of mortgages. Cash rate. Boom. Lauren, you're on it. That's awesome. I didn't know whether I was asking that question well enough to make sense, but Lauren, you understand me, so that's good. Yes, cash rates. What does that mean? Where are we at? What does all that mean to us as property investors? Cash rate from the RBA. Behind, nice. So let's have a look at what is on the menu or, being sort of talked about cash rates right now. Anyone know the cash rate at this moment in time out in the marketplace for us the RBA cash rate. Anyone know what the cash rate is right now? I forgot to check what it was. I think it's like 1.7 or something like that right now. What's the new cash rate in Australia? 1.35. There we go. 1.5, 1.35. So, what does that mean? What does that mean? What does the cash rate mean, folks, when it comes to the interest rate, us as interest rates right now? So 1.35 or thereabouts, we could get it perfect. It is. It's 1.35. Thank you, Sharon. Thank you, Jeff. So 1.35. What does the cash rate mean to us as property investors? Well, it's the floor. It's the margin that banks and institutions, when it comes to, long-term bonds, 10-year bonds, blah, 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 et cetera, 30-day bank cash in like rates between other banks. There's all these technical things out there that are set from the cash rate as a base rate, okay? Base rate. So anyone know out in the marketplace right now what you can get for an interest rate at the moment? I'm looking here. I've just gone to a calculator out in the marketplace right now. And let me go to my share screen. Go to a calculator right now. And, right now, if I wanted to go and get myself an owner-occupier loan, I can still get a pretty low interest rate out there, okay? And if I went to interest only, it kicks up a little bit, 3.79. So, how is this all set? What does it look like? Let's have a bit of a look at that. 1% on savings. Okay, it's kicking up again now, Bob. So if we look at this interest rate here of, let's call it 4%. Let's call it 4%. I'm just going to call it 4 for the interest. Interest only portion of our investing. And if we go back here, I'm just going to quickly whiz up here for a second. So at the moment, we've got 1.35%. Let's say the interest rate is 4%. So there's a margin here, okay? And this is interest only, by the way, folks. That's interest only. So there's a margin right there between, that, this end of town and that end of town. And that's where the banks will make their profits and take the risk and whatever it might be, okay? So if we were to extrapolate, just having a look at what that might look like into the future, if the lenders or some of the predictions are correct when it says, okay, here's the big four. And let's be honest, they're often as wrong if we're on predictions. Are they right? To be honest, I've probably never seen them be right. But let's have a look at this. I don't think the banks are making these predictions. The market is making some predictions, and we'll have a bit of a look at that at the moment. Okay, so what does it mean to us into the future? What's the margin that we can expect into the future? So this margin right here, 2.65 as we go along, okay? Stick with me here. So I'm trying to make some sense of, what could we, because the thing is, folks, often we have this thing in our mind, or we don't have a thing in our mind, where are we going? What does it look like for us as property investors for our interest rate into the future? And it kind of becomes this boogie monster, and we're trying to make sense of it, and we don't know how to make sense of it to give ourselves something sensible so we can make decisions. We just sit and get stuck. We're like, we won't do anything, okay? So how can we do some math, make some, reasonably good, educated calculations to see what it might look like for us in the future? Okay, 2.65, let's keep that in mind. Up here, we're saying, all right, it ranges anywhere from a cash rate of 2 to a cash rate of 3. Not many. are looking at a cash rate of 3. So let's go let's say 2.3 as a cash rate. Let's go 2.3 as a cash rate, folks. Over here, let's go 2.3 as a cash rate. So we've got the cash rate, the cash rate, plus the margin, which is 2.65, okay? And what does it look like? Right now, interest rates, interest only. Let's round that up a smidgen. Let's round it up a smidgen, folks. And let's call that 5%. So, everyone following along? The idea that, that the margin here, that the banks or lenders are thinking about what might happen and where might this interest rate end up. So it's looking like that, folks. It's looking like that. That's the kind of calculation we're looking at. And there you go. Yeah, and exactly, Lauren, right? So what I always like to do is like, how can we work out and sort of take away the boogie monster? Now, there could be plenty of lenders out there who would be lending us money at maybe even better rates than that. You might get a loan at a better rate than that. So my thoughts when it comes to this stuff is, I think we're going to be, with interest only, by the way, I think we're going to be landing between kind of these numbers. That's where, for interest, that's still pretty darn cheap, pretty darn inexpensive when it comes to interest and cash borrowed, so we can buy some investment properties. Now, the marketplace is already saying, hey, because the Reserve Bank has put up interest rates or the cash rate, et cetera, we think it's actually not going to go too high. Here's where we think it looks like. And it's around about that 3.4. I don't know if you can see that right now. Around about 3.4. And I think, what did we do? 2.3. So there you go. Okay. What does it look like into the future? Borrowing cash and dollars and cents, right? So for all of us as investors, how do we look at our borrowing and what does it look like as we move forward as investors? What I want you to do, and maybe tomorrow we can do this in the Wealth Coffee Chat, is we want to have a look at the calculation. We want to have a look at the calculation and then flow that through into our cash flows, into our spreadsheets. And you guys have seen this one before. Many of you ask me about this one often, which is our cash flow calculator. It's in the downloads in our Facebook groups. So jump in there and adjust your rents and have a look at how much your rent needs to go up to offset these potential interest rate rises in the future. And they're going to happen over, 1 or 2 years. So too will our rents go up into the future as well. So I thought I'd touch base on that one this morning. Have a look at the calculations, different ideas from different lenders. Nobody knows exactly what it looks like, but work yourself out of range. Don't let a boogie monster sort of be sitting in the back of your mind that you're unclear about, and you just get stuck and like, oh, maybe I won't do anything. And then you can have your buffers and your acquisition plans still working as you move into the future, and there is some runway there for you to keep moving forward as an investor. Hopefully that makes sense, folks. Hopefully that makes sense from where we are today to where we might be. Calculate the best guess for you as an investor, and keep moving forward with good buffers in place. If you need some help and some assistance and some, confidence, that's what we do with our coaching and mentoring program. Reach out if you're interested in that. But that's it from me today, folks. Wealth Coffee Chat done and dusted. Maybe a short and simple one today, but I think a pretty important one as we go. So you guys be awesome. Be well. Remember, this thing's a marathon, not a sprint. And the idea of buying good quality real estate, buying well and not selling, is something important, because property is a slow-moving beast, and it's certainly not a get-rich scheme in any way, shape, or form, is it, folks? We all know that. All right, that's it from me. You guys be awesome. Be well. Great to catch up with you. Just quickly, join me tomorrow for another Wealth Coffee Chat. I'll start to unpack some of that stuff that that we heard from Jeff last night. All right, folks.